Hi there folks, it's Matt Hayson with this week's Market Wrap, and this week I want to turn the attention to a couple of really good sales starting at 109 Mort Street in Balmain. This was the highest price sale that's occurred in the Balmain area for 2019, and here's some interesting outcomes. There was 167 buyers that came through the inspections, 10 contracts were issued, the property sold prior to auction above $4 million. However, the key thing that I'm looking at, the demographic that was looking at this particular property were predominantly empty nesters and downsizers. Now this pool of buyers has been in and out of the market for well over 2 decades, and their conversation was firmly focused on blue chip real estate remains a fantastic long-term investment. Now I move our attention to 548 Darling Street in Rozelle that was sold by Peter Gordon on the weekend. Now this was without question the strongest auction we've seen conducted right across much of the inner west for well over 6 months. 11 registered bidders, competitive bidding was registered, the property sold under the hammer and above $2.3 million. So what does all of this mean? Well, we know that one hot day doesn't make a summer. However, are we starting to find where that watermark is and where buyers and sellers are finding that fluid position to transact? We're certainly seeing a greater recognition from those moving through the market right now that changeover costs are actually pretty positive, and this is a good time to purchase. Now moving our attention to interest rates. They were left on hold during the week yet again. However, there's growing conversation about the next move from the RBA will be a rate cut. Shane Oliver, the head of strategy and the chief economist at AMP, is calling for 2 rate cuts in 2019. However, Macquarie Bank, they believe that interest rates will remain the same until 2020. However, it is largely agreed that interest rates are certainly not going up for a considerable amount of time. Now moving our attention to the New South Wales budget, it was announced during the week that the budget has been slashed by $9 billion just in the 9 months alone, with the New South Wales Treasury coming out and saying that the New South Wales economy has slowed greater than anticipated. Now looking at the property market in particular, $750 million has been wiped off the expectation in stamp duty, which would suggest to us that Treasury is factoring in fewer property transactions over the next 4 years. Now this is weighing negatively on consumer confidence and spending and also dwelling approvals. However, the New South Wales economy has still grown by 2.5% over the last year, and that is expected to continue at the same rate for the next 4 years. And then finally, lending. We're continuing to hear that the regulator is looking at responsible lending practices. So what does that mean? Well, it means institutions are closely looking at the last 6 months of bank statements and credit card statements to look at the discretionary spending of any applicant. So what does that mean for the consumer? You should be prepared for a loan taking quite a bit of time to go through that process. And then secondary, you should really curb any of that discretionary spending to improve your borrowing power. Right now, what we know is that there's 30% more property on the market than there was at the same period last year, as more property is taking longer to sell. And we also know that there's now just 5 weeks remaining until Easter. A lot of new properties come onto the market over the last 10 days, making a wonderful buying and selling environment for people that have finance at the present time. So folks, that's all we've got time for this week. Thanks so much for watching, and our entire team looks forward to seeing you out and about this weekend.